Good morning, peoples. Bruce with Targeted Wealth Creation. Back at ya. Friday morning, February 28th, last day of the month. All right. I got some NEOS data for you. I've got three of the popular funds, and then I've got the BTCI, which is their Bitcoin. So let me jump in and do them individually, then do a summary. And then, like I'm starting to do on my videos now, I'm going to take you over to my database and I'm going to compare like for like, sort of apples and apples. So when we're talking about Spyi, it's an S&P 500. This one pays monthly. We know about Roundhill. We know about Yield Max. There's some Defiance. There's Simplify. There's some iShares. There's a few people that have this kind of stuff. Pro shares, I think I mentioned them. So I want you to start comparing, and there's going to be some that I'm going to add. I mean, JP Morgan, BlackRock, I mean, there's different people, and some are lower yield, but I think if you get the idea, maybe somebody has always been an SCHD guy and they're getting 3, 4, 5% return, and all of a sudden, they think, oh, maybe I'll jump into Misty. Well, might you not just go with an index fund that pays you a little bit more, like a Yield Max weekly on SDTY or Roundhill or Defiance or somebody like that before you just jump wildly into one of the most volatile arenas there are? Don't get me wrong, Misty has been a fantastic performer from a yield perspective. Very volatile, as we know, crypto is. All right. So with Neos, let me jump in. So Spy Eye, kind of a mixed bag. I think it's pretty good. It's 11, 12, 13% yielder on cost. What's the current price? 49.95. Well, it declared on the 25th. The X is the 26th, so it pays today. So if you're seeing this now, you can't really buy it, but this is more about education and becoming aware of everything. And if you already own it and you want to check what the stuff I'll start covering all these. I'm going to be doing the granites, the roundhills, the neoses, the yield max, the curves, other ones. And then I'm going to work off of my database tool to just educate you guys a lot across the board with how all these things compare. I mean, how many times, one of the things that I personally did, and I only did it in a sector, real fast. I know people say, oh, Bruce, you go off, but it's educational. So I was playing precious metals and I was new to it in 2001. I was like, oh, the .com bust happened. How can I make money in this next thing? I had all these stock options. I was working for one of the big four horsemen in the IT arena, along with Cisco and Microsoft and all of that kind of stuff, and making a lot of money. And then when the .com bust, it was like that had been the final capitulation, but that had been the thing that was driving us up, making so much money. Additionally, we were making good money anyhow, but we were really making money when the .com boom and then bust happened. And I was like, man, I got 5, 8, 10 years to retire. What can I do in an investment standpoint? I was always saving a lot of what I made, and so investing, but I really wanted to figure it out. And I said, oh, you know what? It's commodities. I started to understand the commodity cycle. So the point being, real fast for you guys, is when I got into gold and silver and precious metals and understanding, large cap, mid cap, small cap, all of that, I also started learning about leverage, 1x and 2x. And at that time, they still had Nugget was a 3x in the day, right? Which later went back to a 2x. So JNUG, Nugget, all that kind of stuff. And then just, the GDX and the HUI and what is this and how does gold trade and, how do the bullion banks push it down and algos and all the things. So it's something that I just relate to the overall markets now. So I don't think anyone can stay up with what all, say you're a Tesla fan or you're an Nvidia fan or Nvidia. I say Nvidia, it shows you my preponderance to Yomax. But say you're a Tesla or Nvidia or a MicroStrategy and you love those SMCI. So there's probably 15 2x, 1x, one and a quarter, one and a half, you know, 2 2x inverse, 2x bull. So just trying to understand what tools are there in a toolbox if you want to trade it, right? If you want just an income fund, the same thing. Maybe you just said, "Oh, I'll go with the Omax. They tend to produce the biggest yields." And now all of a sudden people are saying, well, I'm not in Neomax much anymore, Bruce. Just like I got pretty upset with them because I didn't think they were actively trading well enough. And I think they were going through too much nav erosion. And, that's going to happen. I get crypto flipping, going from 74 to 108 and maybe going back to 74. We'll see. And then probably up to 125 or 150 in the next move. So when you look at that kind of stuff, that's volatility that can create nav erosion. But I'm just talking about nav erosion when you're on an S&P 500 and you look at some of the old Defiance funds. I forget their vernacular symbol, but they're in my database. And they're just down, 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 down consistently, yet they're spinning off pretty good income, but it's not offset by the nav erosion, right? Nav erosion's fine, like I said, from 70% yield and a 20% NAV loss, that's a 50% total return. I'll take that all day. So that's what this database and these tools, and it's given me the idea because I started some semblance of doing this when I was in the middle of the whole precious metals. And then, to give you an example, like in precious metals, South African metals, there's 3 or 4 or 5 deep mines over there that are mainstays. They typically run early when the runs happen. And then what happens, gold leads and then silver comes up toward the end. So toward the end of the bull market in precious metals, both in miners and then obviously the metals themselves, silver outperforms like crazy at the end. It's just violently up and down, right? And we're seeing that right now in that gold's been leading this. Silver hasn't even it hasn't reached this 1980 high, right? Let alone it's 2011. Both those were around $50. We're still trading in the low 30s. It will, right? It'll go way up, but that's so I try and relate it to this stuff. So that's why I'm on this educational bent about letting you see how all this stuff stacks up. And there's some subscriber databases but I've looked at them, they're not that good, and I've played around with this. I think I got something useful to help you guys when I talk about funds and then do the comparative tool. So let's jump into Neil. So SPYI, not a bad tool. 49.95 is the current price. Back at the declaration, the day before declaration, when they were 51.22. So you can see, the market's been down. So yield on cost at that time was a 12% yield, pretty consistent across the board. How did they stack up then on 3 months, 6 months, and 12 months? So what do I do with that? They have the track record, right? We see here now a couple of these funds have reached the 9 month and 5 month. So I can do 3 month and 6 months, but I have to project out and annualize to get a 12-month number. And I just want you to know some of the 12 months are real and some of them are annualized. They're projected out based on a lesser amount of months. All right. So 2.97. And by the way, I said this in an earlier video, your yield numbers are always going to be in the green. They're always going to be positive. It's like if you give me $5 and I give you back 2 pennies, that's some percentage of a return. And next week I give you a penny. And then the week after I give you 4 cents. Well, every time there is no such thing as a negative yield. Okay, you may have a low yield or a high yield. So just understand that. But when you get into NAV, that is not true, right? So NAV simply says, hey, we're at 49.95, but for the purpose of this previous declaration a couple of days ago, it was 51.22. Well, this is a monthly payer. So you go back and you use 52.03 and you say, okay, well, in 3 months, we're down, right? This would have been the third month, the second month, 1 month. And so you see a minus 156. So how did our 6 month NAV do? Well, it was minus, or sorry, that's not relevant. So now we want to go over and look at 3 month total return. What is that number? Well, it's nothing more than 2.97 in yield and a 1.56 loss. So total return, they're all respectable, right? And these are all actual. There are enough months in here to actually generate 142, 530, and 1399. And I always tell people this. You know, the reason I picked 3, 6, and 12, they're popular with a lot of people, analysts, fiscal people, but they're also easy to get an annualized number. You know, before, if I'm just tracking something, I'm always calculating, annualized yield. But in this case, I'm just showing you 3, 6, and 12. Well, 12 is annualized, right? That's 13.99. But if I look at the 6 month rate, it was 530. Typically, I double that, right? So that's 1060. So 12 months is overall better. Same thing here. If I doubled one, this should be ideally 2.65, right? If this was 2.65 and I doubled it, which 3 months to double to 6, it would become 530. So you can see this is underperforming, this is underperforming that. So there's a gradual trend down in total return, which is anybody who's been in the markets the last 12 months, you're seeing the dwindling coming down. That's why I fear it could get worse into March and all that. And this is sort of a culmination of the market just puking itself on of all these high valuations and then getting back to some core base value and starting to move up again. All right, so that's what I have in Neil's. Now I'm gonna give you a summary. I'm gonna give you each of these individually real fast, then a summary, and then move you into my database and look at a lot of other companies that do the same kind of things, and we'll summarize that. All right, so this one's on the S&P on SPY. So QQQI, right? I give you the dates of when they were launched. So again, we have enough time with the previous one and this one so that they have real annualized numbers. And you can see here, I tracked the change. What did it do from these? Since these are monthly, it doesn't matter if I'm doing it for weekly. I show the change from the last week. In this case, they're monthly. Okay, so we're down 122, down a nickel. We have 4 consecutive months of at least being up. Couple of downs, couple of nice move months up in May and June. A relatively big month down in March, and this is where this gives me the year that I need worth of data. Okay. So, because it goes back just a hair more than that. So, let's look at this. It's yield on cost based on this number 14. So, this one is paying oftentimes the NASDAQ 100 QQQ, we call it different names. That typically yields more in most of these funds than the S&P. To me, the S&P is broader, right? You got 500 companies versus, potentially 100 companies. So that's why in some cases, but to be, it's like the Russell, a little smaller cap. And there's times in the market within the sectors that each one outperforms the other. To me, I think the NASDAQ is long in the tooth, the NASDAQ 100. That's where all your big techs are. So I think those guys are going to be punished, or Mag 7, a lot of these guys. There's a few companies on the New York, but in general. And we're going to see where the shift is. I can tell you that I think it's commodity for most of the rest of this year. That's oil, that's energy, that's cattle, that's grains, that's, all kinds of lumber. But, things will do better. In particular, I think the grains and the metals and energy will do extremely well. There'll be fits and starts, and then within energy, is it oil? Is it gas? Is it uranium? I happen to be very bullish on uranium, but I think oil will do pretty well too going forward. All right, so let's look at this guy for just a second. Does anything stand out? Again, the yields are all positive. This is about a double of this one. This one's about a double of this one. So this one is at least performing more consistent over the periods of time. 3.46 times 2 is like 692, real close. 2 times 713 is 1426, very close. Now on the 3 month, the problem is, what's that going to do for total return? It's not going to give us. We had a yield of 346, but we lost 237 in NAV. So we've got a paltry 1%er over the last 3 months, indicative of what the markets are doing. That's telling us a lot of info right there. 6 months is 8.6. So if this is only one, that means the 3 months prior to that were 7.5, right? And here, your 6 month and your 12 month are pretty consistent again. I get 1720, right? A lot of consistency in the NASDAQ 100. All right, let's go look at the Russell 2000. Now, this one has only been going since June. So we got enough real data for the 6 month numbers, and I had to annualize to get to the 12 month yield. So 3, 7, more consistent, right? Double this, I'm here. Double this, I'm here. But look at the 3, 6, and 12. Everything is negative. That will kill you on a 14 yield. You're back to a 7 yield now. Actually, 8. Look at your total 3 month return. And what do you see here? Strong on 12 months. Well, in 6 months, it's minus 13. I'm not doing conditional format. And some of these I do conditional in my database. But in this one, I'm just changing it. Actually, I like Google Sheets, the way they do conditional formatting. Excel has always been a pain to do their conditional formatting. So 8.4 minus, just call it break even, right? So this is 8% better this 6 months than this 6 months were. And within that 6 months, it's got a little worse over the last 3. All right, so we're going to remember, we're going to look at these all together. If you're in the yield on cost, 14%. That's great if you don't have this stuff. Now, if you can get 1, 2, 3, 4% NAV gain, that would be nice. Okay. Now, in some fairness to them, they do show a fair amount. Let me show you some of the, well, I'll tell you what, you go over and look at it. Maybe I'll pull one out, but it sort of messes up my screens. This is what Neos does for you on their website. Okay, they'll take 10,000, and this one is Spyi. Okay. And sometimes they're ahead of the game and they'll show you Spyi NAV, and then they're showing a CBOE, right? Which is a standardized S&P 500 buy right monthly index. So they're kind of outperforming it, but they're pretty close to it. Well, and some of these funds are underneath the correlative, they're underneath the one that they're tracking. So I'm going to close this out, and I'm going to go to my summary, and then I'm going to compare in the database for you guys. Okay, so here's what I've done. I pulled these together and said, if you're thinking about Spyi, QQQ, or IM, right? You're thinking about the S&P, you're thinking about the NASDAQ 100, or you're thinking about the Russell 2K, big indexes, relatively speaking, and then this one is Bitcoin. Okay, so let's do a real quick before I do the summary. Bitcoin's only been out for 5 months. Okay, look at this. You all know it, right? Look at the change month to month, minus 10. So we all know how we've been hit. Just go take a look at Misty, look at Pulte, even though Pulte is not really crypto, but it is AI and big tech stock. Definitely got hit along with everything else. And even my gold and precious metal miners should get hit in this March as well. All right. So what do you have here? Well, your yields are high, right, on these funds. If you're managing a BTC fund, you're going to have high yields. The question is, Can you get those high yields like in a Misty and a Coney and not have the big NAV, right? It all depends on where you are in the sector, what your purchase price is, how much you're DCAing, all of that. So I wrote up here 5 months, 5 months, 5 months, right? So on the 3 month yield, it's legit. On the six, it's got five of the six. So I multiply it times 1.2, right? To make it be a pure 6 months. And then when I have that, I need to multiply it by 2.4 to get a true projected annual yield. It would have to continue exactly like it did in the 5 months, but that's the only basis we have. So the 3 month NAV, look at this, we got a 741 yield, but our NAV's killing us, right? So there we are. We got great NAVs in the 6 month and the 12 month, right? And great total returns on 6 months and 12 months. And this gives us pretty much the same thing. Multiply this. I mean, if it was 36, it'd be 72. So it's almost exactly what you'd expect. This is horrible, right? And we know that. It's been trending. All right. So here's summary, guys. So before I get to my database, I'm looking for that for a second, guys, so I can get ready to bring that over. Okay, so this is laid up against each other. In all reality, you wouldn't want to be comparing something like this, right? You wouldn't want to compare a 3 month yield, a 6 month yield, and a 12-month yield and something like crypto. At times, it's going to underperform these indexes. Most of the time, it's going to outperform. Okay, from a yield perspective, what you really want to do is come over to your total returns and look at my 12-month and say, okay, I do this with Roundhill all the time. Yield Max will be there. I've done it with Defiant. So there, Spyi is giving you about 14% on a 12-month return. But over the last 3 months, not that great. Okay. So you've got a 17 in QQQI because when the NASDAQ is good, it's really good. But it's been under the SPY, under the S&P 500. And this now, remember I didn't do conditional formatting on this one. They just jump right out when you see that red color. But this over the last 6 and 12 months is fabulous. I just showed you in that. So, guys, this stuff can educate you. If you got a lot of good data and you're watching this, you can learn. That's why I'm talking about educating you and not just giving you a bunch of detail that's not really relevant. I find this extremely relevant. So I did some searches, okay, filtering, I should say. Okay, and let me F11 this. Okay, so now I pretty much got everything in here. I did two categories. I did all my indexes and even includes another thing where in type I say targeted, right? And I'm saying targeted SPY, but reality it's SPY, right? I should as I progress, there's something else I want to add. If you guys can, as you start getting used to this, you see something you want me to add, I will add. One of the things I want to put a volatility factor, right, in here and say, hey, how volatile from low to high is this thing? We all know that crypto stuff, but for people who think, oh, I want that, right? But they got to understand, and I'll put that on a 1 to 10. So anyway, we go through here. Now, this messes up stuff, but since I've got in this week's thing, I've got um, now I forgot Neo Btci, whatever it is. Where's Neo's? Spyi QQ. There it is, Btci. All right. So I wanted to leave them in here since I'm on that subject. But if all I had was a comparison, then I would just go to type and category BTC only, right? And I take out my Ethereum or the crypto category. I'll label something else if it's not pure BTC. So having said that, That's not a fair comparison to come out here. And I ranked it right now on 3-month yield. So who's doing the best out there? And BTC and all these index funds in a 3-month yield. Well, doesn't surprise you. Misty does. But would you really wanted to be in Misty if you bought 3 months ago and owned today? You wouldn't. Look at the 3-month NAV. You got a 23.45 yield, which YieldMax is good at paying. Even YBIT is doing great, 22%. They're in second place out of just these two categories, right? But look over here at your 3-month NAV. You got 31 and 39. So your 3-month total return, that's not what you want to see. So let me leave this stuff and come over here and see who is performing. Okay. Well, it's not a great performance, right? Why would it be? Because the market hasn't done well over the last 3 months. It's very, sometimes you look at a Dow or you look at an S&P 500, but you got a lot of stocks in there that aren't doing well, and you wonder sometimes how that index is even staying up there. So this is a new one. Note my red here, guys. I'm even including these. I could have in category subtracted out anything. That's why I said it's not a normal QQQ. It's a minus 3x. It's an inverse. Now, that might be something you want to be in for the next month or so, just like YQQQ at YieldMax, right? But I want you to look at it. So it isn't here just about yield, because what did I sort on? I sorted on 3-month total return. It's easier to have a total return when you have a positive NAV. Right. And look at this. Look at all these index funds and management to give you income that are just kicking your butt for a loss. Right. Now, did you come out ahead? Yeah, maybe. Not always. And I get it. It's a long term game. If you're out in Round Hill and you're buying every week or two and you've got their three indexes, great. Right. Speaking of that, maybe I did something. Do I not showing Round Hill in here? Or did they just not? Oh, there they are. So I knew I had them in here. See, they're not stacking up to be the best, though. Here's XDTE, QDTE, and RDTE, wherever. Oh, okay, here it is. Now I can go in on fun and just change, when I want to do it. But there was a purpose here by having Neo in here and saying, okay, the best 3-month yield for them, but the people that are showing up, the first two are inverse, right? This is an inverse 1x buy. So it's 1x bear. Here's a 3x bear. So it's yielding more money, but it isn't something you want to be in for a long time. But when you're going down, you certainly want to be in it. Here's Drexon QQQD is theirs. It's too new, guys. That's the problem with that. YQQQ, 5% yield, right? 10% over the last 6 months. So again, what is YieldMax known for? But you wouldn't have wanted to be in it 6 months and 12 months because the markets haven't been doing poorly. But the last 3 months, yeah. But it's only barely 0.85 on a 3-month return. All right, so I'm hoping you guys are seeing some of the things that can really help you on this kind of stuff. I got Jeppy in here, iSpy, Spy T, XDTE, IWM, a whole lot of stuff. And obviously on the BTC side, we've got BITO, we got YBTC. All right, guys, so that's what I got for you. I'm going to work on more. I've even got recovery rate in here, and I'm going to add how many months, which is almost works the same way, how many months to recover your investment on a dividend. The only thing I'm not doing is calculating reinvestment of the yields, which I can do. All right, guys. So that's what. See, I've got recovery in here, months to ROI, and I'm working on fixing that up. but it's not relative to everything. And then the other thing I want to be able to do, and I'm already doing, is like go into gold or go into commodities. All right. You get general commodity fund, or you get a gold fund, or a silver fund, or an oil fund, energy fund. Those are going to be, I think, attractive going forward. All right, guys. Hopefully, this is helpful. I got more to do here. Again, this is Bruce with Targeted Wealth Creation. Let me know your thoughts, comments, what you want to see that I'm not showing you right now on a certain sector. I'm trying to just use this relative to what I am showing you each time, right? So next time I do a GDXY or something like that, then I can go in, or I do something on an oil basis or uranium or something like that on the energy place. All right, guys, that's what I got for you. Again, I'm not a financial advisor. Bye for now.